Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Frank Zorrilla on the line. He is a founder and chief investment officer of Zor Capital. Frank, how you doing this morning?
Doing great. How about you guys?
We're doing good. We got a good show going on here, and you're keeping an eye on what's going on over there in Europe and Mr. Draghi here. I guess what they initially interpreted what he said is good news here, and the S&P spiked up to nearly an all-time high. But we've lost altitude here and dropped 10 points. Is that something you pay attention to, or do you just have your own secret sauce that you follow to tell you what to do in the markets?
Well, as far as Draghi, he's been singing the same song for the last few months. He hasn't been doing much. I tend not to look at the S&P 500 throughout the day, just because I think that throughout the year since 2009, things have changed a little. Where sometimes if you have the S&P, the Dow Jones, and you see it at all-time highs, and you say to yourself, we're due for a pullback, that normally for most traders will keep you away from taking swing trades. And that sometimes becomes an issue. And the S&P lately, if you look at the divergences, it's not telling the full story. So I try not to do anything via the S&P 500. I try not to look at it and just allow the stocks that I have on my watch list to tell me what's going on with the market.
Okay, you said it's not telling the whole story. Then, what do you think it's missing?
Well, so the S&P 500 is trading at all-time highs. And so far this year, we have more stocks down 10% for the year than up 10% for the year. As a matter of fact, we have roughly about an equal amount of stocks up 25% for the quarter and down 25% for the quarter. That doesn't even make any sense. So I think that the market is going up. It's been driven mostly by large cap buying in a few stocks. So those breadth numbers just don't add up as of right now. And that's been the case for a while. And that's probably one of the reasons why hedge funds are underperforming, because mostly hedge funds, what they do is they go long stocks that might short the indices, and I think the play is to go long the indices and short individual stocks.
Okay, so I mean, just from your tone here, you kind of think maybe the market's gotten a little bit ahead of itself here.
No, not
No?
at all. Not at all. I have no idea what's going to happen with the market. And every time that anyone has said that we're ahead of ourselves, the market continues to grind higher. What I would like to see very simply, to see a change of character as far as the market itself, is for us to have a correction. And then once we have that one initial bounce, I would like to see the correction to continue and make a lower low. I don't think it's happened yet. So what happens is that we get a correction and we go up for 17 to 20 days in a row. So I think until we get that big deep correction, we get that 3 to 5 day bounce and then correct again, I think that every dip should be bought until proven otherwise.
Okay, I mean, some may characterize that move in October as the correction to buy, and it certainly didn't fit that scenario you're talking about, where you had the dip, the rebound, and then the retest, and I think that's where all the hedge fund managers and everyone got just their head spun around. Was you had the quick rebound off the lows, and then it just never looked back. So was that the correction that you were looking for? I mean, or you could say that's already happened, and we built a new base, and we're going to 4,000 in the S&P.
Right. I think a correction, it's not only, I think it also has to do with time. I think a correction that only lasts 10 days, and then we recover that correction within days, it's not the same. You don't allow stocks to set up. It doesn't allow stocks to catch a breather. And then what happens is you have a whole bunch of people who are underperforming when they chase the indices. They have no choice but to buy to keep their jobs. So I think a correction also has to do with time. And I think look, corrections are great for most investors if you can avoid them right off the bat, because normally you get big moves off of corrections. Nowadays, when you're swing trading, you don't have much follow through. You will have a stock that goes up and breaks out one day, and years ago you would get that 2 to 3 day initial follow through. Now you're getting a 1 day follow through, and then it comes right back in. It shakes out many traders, and then it shoots up again sometimes.
Okay, Frank, let's just go back to, the start of your career. You got started at a very young age. 10 days after your 20th birthday, you became a Series 7 licensed stockbroker, full service broker until 2011. So did you go to college and just say for a couple years and say, that's not for me?
No, no, I went to college all 4 years. I started school early. I started school extremely early. So I started as a cold caller back in 1997 as pretty much like an internship job here in New York City, and it was a scam. But it just so happens that I did okay as far as selling is concerned. Whatever I had to get some qualified leads, and they kept me on. And what started as a summer job, became just a full-time job. And then a year later, I took my Series 7, whatever it was, May 20th, 1998. And then since then, been a broker, full-service broker until 2011. I dropped my 7 license, got my 65, and became a registered advisor.
So were you like one of these child prodigies that started college like at 15 or 16?
I graduated high school. I just had turned 16 when I graduated high school.
Okay, and then you started college. So getting st-
Immediately.
yeah, getting started, that young in the business. Do you have any mentors or anybody that you've tried to pattern your money management skills after?
Right. So back then we didn't have Twitter. So normally if you wanted someone to teach you, you had to go to certain firms. So when I started, it was all about selling. Because when you're a broker, your job is just to bring in assets. Similar to what your cookie cutter financial advisor does today, which is to gather assets. It's more about dialing the phone, collecting assets. But I did start in 1999, 98, no, actually 98, 99, 2000. The guy who ran the firm, the CEO, was a guy named Phil Puccio, who ran the equity desk for Drexel Burnham Worldwide from 1975 to 1985. Then he ran the desk for Prudential, who else? Credit Suisse First Boston, I believe. And he was a trader, and he taught me a lot. And then throughout the years, the market has changed, and mostly what I do is based on empirical observation. Things change, and market changes. So I primarily do some swing trading. And years ago, I will only focus on stocks that would trade near their highs. And nowadays, if you look at what's going on, the way the market is trading, stocks break out from highs, from lows, from the middle. It really doesn't matter in the short term.
Okay, so let's define your time period. I mean, swing trading. I mean, that could be couple hours to a couple days to a couple
0 to 10
months.
days.
I'm sorry.
0 to 10 days.
So the zero ones, you're wrong. You get stopped out right away, and the ones that last
It could be
longer.
either or. It could be stopped out. It could be the stock. I got a Chinese stock is up 10% for the day.
Oh, okay, all right. So that's a pretty short time frame. Do you do that? Do you do that strictly in the equities, or do you dabble in the options market at all?
No options, strictly equities.
Strictly equities. Do you have a core of stocks that you follow and you wait for the setups, or do you have particular setups that you look for and then you don't care if it's ABC or XYZ, if it fits your particular technical setup, you go into the trade.
I stay away from. I stay away from biotechs. Number one, number two. Then I also need some type of liquidity filter. But mostly, what I'm looking for, to look at any chart, you normally have a period of contraction, and then you get the expansion, and the expansion normally comes, it moves in the direction of the preceding contraction.
Do you have a favorite stock? One that you say you've had your highest percentage of wins in.
No, I can tell you which ones of my stocks that I hate. Lulu is one of them, and a
Okay.
few oil stocks. So no, I don't. There's not one that I'll say, hey, I've been right 7 times. No, I think a lot of. When you swing trade, you do a lot of trades. Not one trade should make a difference in the account, but throughout the actual year, they all compound. And if you do it the right way and you have somewhat of decent market timing, you can make a decent return. But you have to do a lot of trades, and you can also keep your volatility down.
Are you more prone to the long side or short side or just whatever the setup is?
Long, long, long. I look at shorts normally over the last couple of years. I've been when I am looking at short, I look at an index only because I manage money. Some guys have IRAs they can't short individual common stocks. However, now I've been actually scanning for shorts just because, again, the indices are not going down. They just haven't been going down. But individual stocks are going down. You can see that based on the breadth. So I've been shying away from trying to short the S&P or the IWM when I believe the market's going to go down, and I'm looking at some shorts. If
Okay.
they triggered, I'll take them. If they don't trigger, then I don't take them.
Okay, question coming out of the chat here. When Frank says the market changes, can he explain what else he's seeing besides the time element? Anything regarding technicals or psychology?
I think both. I mean, look. I mean, years ago, when I saw this type of divergence and breadth that we've been getting over the last 12 to 18 months, and the indices were staying, we're still staying afloat. You can bet your bottom dollar that you can short the index, and that the index will catch up to the individual common stocks. That's no longer happening. Number one. Number two, I think since 2009. A lot of stocks, low price stocks, beaten down stocks have performed better than the actual stocks that have that momentum that are trading near 52-week highs.
We're
That, and
on.
that that's a difference.
Okay, we're on the line with Frank Zorrilla. He's the founder and chief investment officer of Zor Capital. He's been a got started in the business real early, right after his 20th birthday, and been in the markets, observing the ups and downs here. Frank, let's. You mentioned that some of the oil stocks have gotten a little bit better of you. I don't know if that's as of late or longer term. But how about the moves in the crude oil market? Down to that 63.72 low, getting a little bit of recovery. Do you follow the crude oil futures for indicators on your oil stocks, or is it just something that you just trade the oil stocks on their technicals and fundamentals alone?
All right, so the USO, or crude oil has been down a lot, and from an asset allocation, mind frame, I think that you could actually buy crude oil here. And I think, if I ran just strictly asset allocation, I would be buying crude oil here. Just as when something gets beaten up, the way crude oil has down, whatever it is, 35% from the 52-week high, down 20% for the month, I think you can own it for the long term. It doesn't mean that this is the bottom. It just means that normally when you have asset classes that get beaten down that much and you get in, you normally get a great entry. Now, we always hear, big money is made after big corrections, which is true, but once we get the correction, everyone is scared. And everyone waits until the coast has finally clear and the asset class is up 20% to get in. So I think crude oil here, maybe this is not the bottom, but if I was into asset allocation, I would be buying crude oil here, starting to buy it here. If it goes down, you nibble a little bit more, and you treat it like a 401k, where you put money in every single month, and the more it goes down, the more you want to buy.
Frank, this is
And that's only for asset classes, not individual common stocks.
Frank, this is Brianna. I wanted to know, do you trade the momentum stocks at all?
I trade everything. Whether, momentum, you can have a value stock that gets momentum. It could be a small cap, it can be a value play, it could be a beaten up play. So, if you're talking about Facebook, LinkedIn, Twitter, Zillow, whatever it is, I trade it. So, momentum stock is not strictly based on, certain names. It could be just a value company that just went from 3 to 6 over the last 60 days, and now it's just trading sideways. That has momentum.
So have you been watching Twitter lately? And if so, what are you looking for in it?
So I got Twitter on my watch list today. Twitter's, it's been holding this, whatever it is, 38 level, which was the gap, the earnings gap back in August. It's back to that level. It retested that level 3 times already. It printed, I believe, an inside day yesterday. I like this setup here going through yesterday's highs. And if it goes through yesterday's high, which is 39.42, I'll have a buy order at 39.52 with a stop loss at roughly 38.80.
Okay.
So that would be my trade, and if it does do that, then I'm looking for probably a 3 to 5 day move.
Okay, all right. And now that's we've been looking at that thing consolidating for quite some time as well. Just moving on. There's two other stocks I have to ask you about here. Obviously, Apple here. That stock has had an incredible run. Just doesn't seem to pull back very much, except for that flash crash that it had the other day. Is Apple one of the stocks you like to trade?
I trade Apple. I don't trade it as a momentum stock, or if it was a momentum company. Large cap companies, for the most part, I'm not looking to buy breakouts. A situation like Apple has whatever it is, almost 1 billion shares in the flow. I'm not looking to buy a breakout. I have a scan that would say, hey, XYZ stock is down 3 days in a row, at least down 3 days in a row and up today. And I limit that scan to, the big cap companies, QQQs, S&P 500, and the OEX and Dow Jones. So a company like Apple, I'm a buyer of that stock on pullbacks, not because it's breaking out from whatever a 6-month box. I think if you're looking to trade breakouts, small caps is the way to go. Apple and the big names you want to buy on pullbacks, down 3 days up today or down to the 20-day moving average or 50-day moving average.
Okay, and before we let you go, just get your take on Alibaba here. Opened out well above its initial IPO range. Got to 100, pulled back, had that sprint up to 120. I mean, I would love to see this thing back in the lower hundreds. Perhaps for a longer term trade. Doesn't seem to want to get there. What's your take on Alibaba?
All right, so I bought this stock just recently. When was it? I'll tell you right now. When it was down 3 days in a row on 11/19, touched a 20-day moving average. I bought the stock, and roughly, I think my cost was 110.70. I sold some in the way up, and then I was stopped out once it broke below the 20-day moving average. Now, the 20-day acted as support for a few days. Now it's below. What I'm seeing right now with this stock is very simply, it gets the it gets the big down day, it gets that initial dead cat bounce, it filled the gap yesterday. I'm looking to stay away from the stock from the long side until it gets back above the 20-day moving average. If this thing gets back to 100 or 99.70, which is the IPO high of the day, the IPO day high, then I would love to get involved with the stock as far as a long-term trade, if possible, because we all know at some point this stock would be an index stock.
I
There's
just,
no doubt about that.
yeah, I
This
just,
thing would,
I'm sorry, Frank. Go ahead.
this thing would be in the S&P 500 or QQQs or one of those big-time indices, and I think it's one to buy on pullbacks.
I want to point out to our traders here and investors and anybody that's listening to this interview with Frank Zorrilla, founder and chief investment officer of Zorrilla Capital, that there's no bones about what he says. I ask him about a stock, and he has his layout, his plan, what he's going to follow, right, wrong, or indifferent. And I think in these kind of markets, that's what you need to navigate. You need to have a plan. You need to stick with it. And Frank, you seem to be like a great example of following your rules and the technicals and fundamentals, what you want to put in there. But that's what you need to survive in these markets. Thanks a lot for coming on. Great interview. Really enjoyed it. We hope to have you on again soon.
Thanks for having me.
Okay, Frank Zorrilla, founder and chief investment officer of Zor Capital.